Hello everyone. Today we are going to discuss about finance and accounting. Basically, in general, everyone says that finance and accounting is combinedly a single part. There is no differences between finance and accounting. But there are differences that are there finance versus accounting. So majorly the finance is defined as the management of money, the transaction which are related to the money, which may be the investing, borrowing, lending of budgeting, saving, or forecasting. All these are interrelated with finance. And coming to the accounting is the recording of books. So as we know that the journal entries, ledgers, trial balance, balance sheet, profit and loss account. So all these comes under accounting section. Under accounting section, we are having these type of books. So the main difference between the finance and accounting is finance is the part which is analyzed from the accounting part, and accounting is look back to the transactions which are incurred in the business, and based on the transactions the final accounts were prepared. Finance is the management of money and investment for individuals. So for this finance management is financial professionals work in careers such as investment banking, wealth management, and financial planning analysis. Majorly, the finance is broadly categorized into the personal finance, budgeting finance, and the public and government finance, and also the corporate includes in it. Maybe we are going to see those differences in the coming slides. So the accounting is recording, maintaining, and reporting the company's financial records. Accounting professionals work for individuals, in-house at corporations on behalf of other businesses at public accounting firm. These professionals are responsible for ensuring that all financial transactions are correctly entered into the general ledger, that account balances are correct. So maybe the job type we can say that accounting is maintained by the public accountant, and the finance is maintained by the analysts. Maybe the people who have studied MBA, they can deal with the finance. For example, here the summary. So the clients comes to accounting and finance, both are same, and the employers are different from the accounting and finance, which may be the public accounting firms and corporations. And coming to finance, banks and corporations. Financial statements. So the accounting is responsible for preparing the financial statement, and finance is responsible for analyzing them. So the accounting is look back to the statements, look back to the transactions to prepare those. And finance is look forward to manage the things, how the resources and how the budget, how the decisions will be taken place. And the accounting is should be the accurate and reliability. And finance is having some insights and analysis, so the how the picture of the growth of the company is going over. Business purpose is the accounting is to communicate the financial position of the company, whether the company is incurring losses or gaining the profits. And the finance is figure out the how to add the value to the company and its worthy things. And here the accounting is fully based upon the rules and principles which are generally accepted accounting principles, and finance is totally analysis based, which is based on the decisions taken by the management group, and also the analysis which are included in the part of ratio analysis, trend analysis, and comparative analysis, all is included. The financial performance is broadly defined the finance. So here the designations comes to the accounting is CPA, Chartered Certified Public Accountant, and finance is MBA and FMBA. Coming to the next slide, so there are branches of accounting. Not only these three branches are included in the accounting, but there are several branches which are included in the accounting. So now we are going to see the three main type of branches here. So one is financial accounting, another one is cost accounting, another one is management accounting. Basically, a part of these three, we will be having tax accounting, fund accounting, auditing, government accounting, and few things like accounting information system. All these included in the accounting. And coming to the financial accounting, as we were studied from the intermediate onwards, so the journal is included in it. From the journal to profit and loss account, balance sheet, we were aware of this. So these things are included in the financial accounting. And the cost accounting is to estimate the cost of the product, or to know the cost of the product, how much the cost is pertained regards to the product. It is inclusive of cost of the purchase of raw material and labor cost and other variable expenses which are included. So from this cost accounting, the reports we will be getting is standard cost report, variance report, break even point, marginal cost report, price determination. Management accounting is trend analysis, ratio analysis, fund flow statement analysis, cash flow statement analysis, reports, budgetary reports, MIS reports, interpretation. So the overall three branch of accounting has their reports. So the financial accounting reports are derived to balance sheet, profit and loss account. Cost account derives five, which are standard cost report, variance report, break-even point report, marginal cost report, price determination. And the management account is budgetary reports, MIS reports, and interpretation. Here is the differences of financial cost and management accounting. Basis is financial accounting, cost accounting, management. Objects are recording the transaction and determine the financial position and profit and loss in the financial accounting. And cost accounting is ascertaining the price of the good and allocating the prices or the expenses to the good and setting them into accounting for the cost. Management to assist the management in decision making and policy formulation. So the financial accounting is based on concern with the historical data. Through the data, this financial accounting is takes place, and the statements are prepared. And cost accounting is inclusive of both the historical and present situations. We will be taken into the consideration, and we will estimate the cost sheet, and we will calculate the cost of the good. Cost of the good. And the management account deals with the projection of data for futuristic in nature. So the management accounting is the nature that it is deals with how this data is utilized for the future. We can how the growth will be taking place with this balance sheet and income statement, and what is the profits we are having, and how the investors seek to invest in the company. So those decisions will be taken by the management accounting. Principle followed is the financial accounting is purely governed by the general accounting accepted principles, and cost accounting has certain principles followed by recording costs, and management accounting has no principles are followed in it. So the financial accounting is qualitative aspects are not recorded, and cost accounting only quantitative aspect is recorded, and in management accounting both the qualitative and the quantitative concepts are recorded in it. So this is all about finance versus accounting and the branches of accounting. I hope you enjoyed this class. Thank you for watching. Bye bye.